Hey everyone, welcome to Voices of the Oppressed television network. Here is today's stock news. The stock market took a nosedive yesterday and it's got everyone talking. The big headline? A weaker than expected July jobs report that's got investors jittery about a potential economic recession. The Nasdaq Composite entered correction territory, falling more than 10% from its recent peak. Meanwhile, the Dow Jones Industrial Average and the S&P 500 also saw significant losses. Now let's dive into the details. The disappointing jobs data was a major trigger. Job growth figures came in lower than expected, and the unemployment rate ticked up. This sparked a flight to safety among investors, driving down treasury yields. Adding fuel to the fire, tech giant Amazon faced a massive sell-off after reporting lower than expected revenue and issuing a gloomy forecast. Concerns are rising over the impact of artificial intelligence-related spending on big tech's profitability. Intel didn't fare any better, with its stock plummeting over 20% after weak guidance and news of layoffs. And it wasn't just the tech sector. Bank stocks also took a hit amid growing recession fears. Remember the rally from last Wednesday? That was driven by the Federal Reserve hinting at a potential rate cut in September. But now, with the weak jobs data, there's doubt about the Fed's decision to hold rates steady. Some analysts are even suggesting that a rate cut should have come sooner. This market volatility reflects the growing uncertainty about the economy's direction and the potential for a recession. But it's not all doom and gloom. Some analysts see this downturn as a natural correction in a bull market that's had a prolonged uptrend. The surge in tech stocks, especially those tied to AI, had led to overbought conditions, making this pullback inevitable. However, the weak jobs report has raised questions about consumer spending, a key driver of economic growth. Investors are now closely watching the Federal Reserve's next move, looking for reassurance that the central bank is ready to support the economy if needed. The path to a Goldilocks scenario, moderate economic growth and stable inflation, seems to be narrowing, which could mean more market volatility ahead. But there are silver linings. Low volatility stocks with strong dividend yields are gaining attention as potential safe havens. The energy sector, which initially benefited from geopolitical tensions in the Middle East, has pulled back due to recession fears. This could create buying opportunities for long-term investors. Let's also talk about some notable stocks. Chevron, the oil giant, faced pressure after earnings missed expectations and its acquisition of Hess Corporation was delayed. But on a brighter note, Sun Country, an air cargo contractor for Amazon, saw its stock rise as it announced plans to shift focus from passenger travel to freight. Economic indicators are flashing mixed signals. While the jobs report was a letdown, the CBOE Volatility Index, or VIX, surged, signaling growing investor anxiety. Interest rate futures now suggest a higher probability of the Fed making a significant rate cut in September, which could support the stock market. So, what's the takeaway? Despite the recent volatility, some market participants remain optimistic. But with economic uncertainty looming, it's crucial for investors to proceed with caution and carefully assess their risk tolerance. That's all for today's stock news on Voices of the Oppressed television network. Thanks for tuning in, and don't forget to hit that like button and subscribe for more updates. #VOO TV.